Yo, what's up? So this is the first video we've done in a while for the eat.substack.com. I'm going to start making YouTubes. People have bitched to me about not doing it, so here we are. So this one, because this market's so crazy, right? You get like a lot of up and down kind of stuff. So I thought I'd just show this really quick little technique that I use. This sometimes nets me pretty big gains off of like gap downs, gap ups, that sort of thing. So the thing with this market is that you're going to want to find plays that are beaten up and have potential to go up, beaten up that have potential to go down, and vice versa, right? I would kind of differentiate between those two different directionally. So the way that I first do that is I just start looking for gap ups or gap downs. I'll go to a huge watch list. You could look at Yahoo for that. Like Yahoo will give you alerts when things are shitting the bed, or vice versa. Or like if you have to think or swim, it's really easy. You can just go to the public watch list. You can go to like percentage change gainers, losers. So right here, I think I'm using like public gap up, gap down. I was looking at some stuff. And what I noticed was a bunch of, China stuff on Friday I was watching got completely smoked. I didn't pay attention to my triggers. Hold on, I'm going to get rid of all this here so that we can do this from scratch. So the first thing I'm looking at is I want to see gap candles for this, not necessarily like space gaps, right? Like for this technique, this isn't really what I'm doing. Let me show you right here. Like that's a gap, but it's not really the kind I'm playing, at least for this. That's not the strategy. What I'm looking for is these big red candles or big green candles, and then they kind of level off, right? So the first step is going to be really, really easy. I'm on my hourly here. Hold on, let me see if yeah, I'm on the hourly here for that. And so the first thing I'm going to do is just put a wick at the hourly high of a candle of I'm going to put a resistance line or support line at the top wick of an hourly candle that has a candle near it with a lot of room to run. So I know that sounds kind of weird, so I'm going to show you this example here. So I'm going to go ahead and put a line right there, right? I'm going to make this the right color. You'll see why. So I'm going to go ahead and draw a line right there because this candle body here has a lot of room to run. Just so you can see, like, for sake of example, what I'm talking about, it'll be the same principle there. So that's going to be my trigger. My trigger is the top wick of a candle that has a lot of candle room next to it with the one. I went over this in the first trigger video, so you might want to go back and watch those. And then my second wick is just going to be the bottom hourly candle for that day. So that's like the easier one to remember. The bottom hourly candle of that day. So I've done that here. I've got my two triggers now for what I want to happen or what I want to look for. So then the next is I'm going to search just really quick for the flow directionality to see if I see anything that's interesting. So it's interesting here with Baidu, as you can see. So I'm going to go to the quick view, right? That's my next step when I'm looking at the flow to see where the heavy volume was. So here you see all this put volume, obviously, for the places it was going down, right? Like it started at 137, then it went past 125, then it went past 120. So you can see, obviously, here, those are going to be reflected with put buys. But what you might notice here is this 318, 100 put, right? So that's still fairly far outside the money from where we are. And so we go look at this. Let's see, strike range 100. And it was the 100 put for 318. All right, so now you can see that this is sort of high volume on that, like we saw. We looked at the quick view, And we got like a hodgepodge of sort of sells and buys, sells and buys. So what we'd want to do in this situation is probably look at the open interest on Monday. Today's Sunday. That was Friday. So on Monday, we want to see the OI here represent higher volume. But that's not the point with this method. This method is pretty technical, more so than it's flow based, but that gives you an idea of what the directionality might be, what people are thinking. So if I see that 100p holds the OI, then I have like a little bit of bias toward looking for this on the downside. So just to kind of go through again where we did the first step, you're going to find that hourly top wick that stops with a big candle as the next candle above it. Again, if that's a little too technical, go to the YouTube where this is, and we kind of go in depth on how to do triggers. There's like 3 parts of them. So that'll be your top trigger. That'll be your bottom trigger. On your target, so you can have a few different targets, right? If you're scalping, then you want the target to just be the next daily candle that's beneath your bottom trigger. So I'm going to switch to my daily, right? And so there's nothing here for the past year, I guess. Baidu, like, it was really sucking more than it has before. So there's nothing on here. That's the 1 year. So I'm going to go to the, where are you? The 5 year. All right, so now I got to go way back here. And so the 5 year, I'm looking for the first daily wick on Baidu that's underneath that hour bottomly that we made. And so that would be, let's see, it looks like it is about let me show you. 117.56, right? So that's like a little bit more than a point move. So that's like your day trade scalp, right? You buy that when it breaks the trigger, you're looking at a little like kind of 20% gain, maybe 30 if you hold. So to make that trigger, though, you probably want to know how, once you've like set up where your target's going to be, how you know when you want to get in, and then take this back to the tutorial. We're going with the 5 minute. So on that hourly trigger, we want to see a 5 minute candle close above our trigger. And then we want to see that candle survive a retest of that level. In other words, the candle come back and touch this blue line again, or go beneath it, or come down near it and still close above that level. That's how we get our confirmation. So at that point, your trigger's broken, you've retested it, and you're ready to enter that position. And then your stop for the day trade is going to be the next level on the daily where you catch a wick of resistance. Now, if you want to hold something longer, because you might be thinking, well, what if on a swing? Like, it has a gap, it has all this space. For a swing, you're just going to go back to that hourly time frame, and then you're going to draw your target at the next wick that you see. Doesn't matter which wick it is, as long as it's the next wick above your trigger. So this right here is the closest wick to our trigger line, which is right here. So that would be my first target on a swing, which would be 121.13. So a thing to remember too with those is that you want, let me get rid of this. I'm trying to talk and do stuff at the same time. What you want to make sure that you do with the swing is give it more time. So with this, I might just go with the weekly on this, right? Like, it's Monday or Tuesday. I might say, okay, let me buy a 117 put, ride this down to the support level that's on the daily, and then just cut it right there. If you're on a swing though, or just want to hold it a little bit longer during the day because you think the index is showing directionality or whatever insight you might have, then I'm going to buy at least 2 Fridays out, if not more, with a monthly, and then I'm just going to have the trigger break, and I'm going to wait for it to get to that first wick that we talked about. Obviously, you're going to want to stop. Like, you need to stop with any. I've been super bad about respecting stops lately, so do as I say, not as I do. But your stop It's just going to be the previous low of day or the previous high of day. So here, if this put breaks, right? So let's say the put breaks, you get your 5-minute retest, it goes down, but it comes back up and you haven't hit your target, you're going to stop when you get back to right here. So basically the trigger line, because that's your low of day. So 117.95 would be the stop. So that's kind of the process for how I go through those. I will try to show one or two more. Oh, and then also in taking profits, you can use that daily line too. But one thing I've been doing, a lot of people do sometimes, is just put it on the 5-minute. And then whenever you have a 5-minute candle close below the previous 5-minute candle, that's when you're out. So using this example just right here, so down, this 5-minute candle closes near it, but not below it, or not above it. I mean, so I'm holding. Now here, from this candle to this candle, you see this 5-minute candle. The second one I did, it closes above the previous candle. So that's your exit. So looking at a few other examples. Also, sorry if I sound tired. I was out watching Batman last night until like 1 or 2 in the morning, and then it was daylight saving, so I'm completely gassed. So for another one, let's do PDD, because China stocks are just dumping. So here we're going to go back to our 1 hour. Remember how we did this? So we're going to go with a wick that was close to a top candle. Or that was close to a large candle, right? So this is a huge body candle. And then we're going to go to the hourly low of day. So here, if I break this trigger, right, the 5-minute breaks it, the 5-minute retests it, and it passes, then where's my swing target? My swing target's here. Because remember, it's the next wick above the next wick above the trigger. Doesn't matter which one it is. And then we'll go to the same sort of principle on that downside, looking at the next daily support beneath our downside trigger, and the next daily support beneath that is, I cheated, I wrote it down. The next one is, I think it's 31.46. Let's see if we can actually zoom in and get that. So yeah, 31.42, 31.46. So you can see here it's like the same principle applies. You get those smooth gap down candles, and then you put it on the daily, you draw your support resistance. You're going to be looking and watching it happen on the 5-minute, and then you want those candles to be closing below, or you want to hit your target. So it's fairly simple, especially if you've watched the other Yeet videos on our YouTube, the 3-part trigger series. Then it makes it pretty easy. I want to stress those swing candles. I was looking at McDonald's. Just give you like one more example of where its stop would be, right? So if this gray line right here, let's remove this. So this blue line right here is the trigger that I've set, right? You see why? Let me show you. See these wicks? And then that's the highest wick near a big candle, right? So that means it's got room to run. Think of smoothness of candles as like an elevator or an escalator. You can just take it up or take it down, and you don't have much interference. So here, if I was swinging it far out, right, my target would be, actually, no, this will count here. Because even though it's not a wick, it's a reversal. Wicks and reversals are kind of the same thing. It means that buyers came up, buyers got smacked down. So we'll put that here. But so that's for a swing, right? But what if I just want to day trade and get a scalp because this market's crazy? Remember, we're going to go back to our daily, and we're going to find the first daily wick above our trigger line, which is the blue line. So the first daily wick above the trigger line would be this one. So that is 230.67. So that would be your quick scalp. Not a whole lot of money, but ideally what will happen is it'll go above that, and then you could grab it before it goes down below. The other thing to note about these sort of little scalp dailies is that those aren't necessarily hard targets if it's one wick. What you really care about is seeing two wicks, but those are just the safe sort of targets for little scalps. But if we look at McDonald's here, we actually, if we look for the first point of multiple reversals, because that would be a hard level, then we really get that right here. Because you see those three wicks reverse, you get like 1, 2, 3, 4. So that would actually be the hard target, and the other one would be a soft target. A way to put that is if you see one wick reverse, soft target. If you see multiple points of wicks or bodies reversing, hard target. So that's pretty much that to kind of review it. Let me go back to Baidu because I know it was short, but it was a lot of information. Step one, you're going to look for these big candle gap downs or gap ups, especially in this market. Step two is you're going to look for the top wick that's near the largest the top wick that stops ahead of a very large candle, and then the bottom wick of the hourly, so the hourly low of the day. After you do that, you're going to draw support and resistance on your daily for scalps so that you know where the first place is that you want to trim or add or start to pay closer attention. If you're holding it for a swing, you want to be on that hourly, and you just want to go with the next hourly wick. Right. And then you could see this for other examples. Like another one is Docu, right? Because it got hosed during earnings. I actually was a dumbass and bought calls. So here you could see on Docu, if it gets the highest wick, it's followed by a candle body. See, this is the highest wick of all these, and this is a large candle body. So once it breaks the highest wick on the hourly, I'm sorry, breaks the highest wick on the 5-minute, retests on the 5-minute and past, then this is like the swing of swings. But obviously, because it's so far, you're going to want to get like at least a monthly, if not more, for it to fill that gap. And if you wanted to go with something shorter, I don't even know if Docu's ever been this low. If you want to go with something shorter, right, off that blue trigger break that we had, then you'll want to go with the first wick, which looks like 73.31 is your target. So that's that. Feel free to ask me a bunch of questions at your boy Milt. I'm pretty good about answering. Or check out the tutorials, please, on triggers, in case this was a little bit ahead of where you are with it. And yeah, have a good day, guys. See you.